So there is this hidden gem of a pattern, and it often goes unnoticed, and it's actually pretty powerful. And you can use it on any time frame. You can use it on any instrument, doesn't matter. So what is it? Let me draw the picture for you. The market makes a low, then it retraces upward, and then it dips below that initial low or comes pretty close to that, and then it bounces up again. And then finally, maybe it does fade near that swing high point. Well, this movement of price action, it does form a structure that you're looking at. You're going, hey, this is a head and shoulders. I've seen those before. But this does not have the confusion of trend lines. So this might sound a little bit complicated, okay? But here's the beauty of this. Once you know what you're looking for, you're going to start seeing this pattern called the over-under pattern everywhere. Okay, but here's the deal. It's not just about identifying a specific sequence of price movements. The real power lies in how you use it within the broader context of a market trend. So you can use this as the basis for an entire trend change, usually looking at a daily and above chart. But when you find this pattern lining up with the overall trend, that is when good things can happen. So trend following setups on lower time frames using this pattern often leads to quicker profits. And there's more reliable outcomes on smaller time frames compared to longer time frames and fighting against the overall market direction. And again, this is especially true on the intraday time frames. So this is a 30-minute stock chart. The pattern sets up here as a reversal. Now it fails to reach a measured move target. That's fine. That's why how you manage your trades matter. Here we have a setup short continuation trade because we're in a downtrend. And it hits the measured move target, plus a heck of a lot more. And here we have a setup reversal long, and it hits the target. Now, if that uptrend now on this chart stays intact, you're going to continue to look for this pattern until price consolidates or it begins to fail. So why are traders missing out on this golden trade opportunity? Well, first, it's not widely known as other patterns like the double top or head and shoulders. Second, it requires an eye for detail, and you need some practice to spot it. Third, traders are just stuck in these common absolute swing low and high support and resistance structure. These are the teachings that have been going on for decades. Now, the thing is, and the truth is, support and resistance inside of these extreme peaks and troughs actually offers better opportunity. Now, when you analyze this pattern, it's really important that you pay attention to the momentum and volume as price approaches the original swing point zone. The absence of strong momentum or high volume in this area can provide some pretty valuable insight for you. So here's why this is important. We see a weakening trend. Low momentum leading into that potential fade area. This suggests there is less interest of breaking lower when we're looking for the upside. This potentially signals an upcoming reversal or consolidation. And with reduced volume, we're looking at the same thing. This often implies that large players are not actively participating. Now, there are a whole bunch of ways you can enter these, but a simple buy or sell stop, these can work well. Some traders may look for a pin bar reversal. Some traders will look for an inside bar break. The list, it doesn't matter. It's endless what you use. Stops, very simple. Under or over the low high of the swing point. As for your price targets, measured move targets, these are dependable over the longer term. And trailing stops you can use risk reward ratios, doesn't matter, just pick one. Now keep in mind this, if you're trading this as a standalone, right, you need to add in the volume and momentum criteria. And if you're not looking at it as a standalone, but as a pure information, that's perfect if you're looking at that for any other strategy that you're using to see how the market is shaping up. You got to remember that trading and doing well, it's not finding a single magic formula, right? It's about building a comprehensive understanding of how price moves and how price goes through discovery, right? This pattern, this is just one piece of the puzzle, but it is actually a piece that can make all the difference in your trading success. There are traders that have built entire strategies around this one pattern. But here's some key points. I'm going to cover them again. Be cautious of entering trades if there's strong momentum or a lot of volume going into that original swing point area. You want to see signs of momentum and volume declining as price approaches this critical level. Now in Forex, you don't have volume, so look for momentum. You could throw an indicator on there if you'd like. And consider waiting for a clear reversal signal before entering a position, like a candlestick pattern. Some traders might just enter when the candle turns green. It's entirely up to you. So that's it. So what do you think you should do next? Well, you should pore over hundreds of charts looking for this pattern and design a strategy that you could trade consistently.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk disclaimer and privacy policy.